After years losing out to Asia and the Middle East, America is once again looking to regain its crown as the world's leading producer of petrochemicals. And as one senior industry figure recently noted, the US currently has a lot of things in place at the right time. Not least the price of energy and the price of raw materials. It's all a far cry from the dark days of the 2008-2009 recession. But how did INEOS businesses in the US recover from that period? Are they still feeling the effects of that downturn? And what does the future hold in a land that's once again boasting massive opportunity?
2008, 2009 had an enormous effect on INEOS, and Olefins and Polymers USA was no different. We did all the things we had to do. We had to downsize, change our plans, and kind of hunker down to actually get through the crisis.
Oligomers is fortunate as compared to some of the businesses at INEOS in that we're not quite as cyclical as some of the companies. So we actually bounced back fairly quickly after the recession.
We almost saw a change immediately coming out of it. The first signs were that we had a great export market. We started to see the low cost build in with a tremendous amount of low cost ethane from shale gas. And frankly, that all fed us into a great performance. Then we were able to come in and start to take advantage of the opportunities that sat in front of us and invest in the business and start to grow it.
Between 2013 and 2017, about $48 billion of money will be invested in the chemical industry. And obviously INEOS intends to play a fairly significant role in that investment.
We have a 250 million pound expansion on ethylene going in. We have an expansion in polyethylene. We call it Project Gemini at our Battleground site that's going in. That'll be almost a 500,000 ton plant. We're looking at an ethylene glycol plant expansion that we call Project Nebula. So we have a number of things that we're doing. And then in the background, we're starting to do some studies even on a major plant expansion at Tacubaya with a new cracker that actually would even take a bigger advantage of the abundant supplies of ethane that are coming into the market.
There's two primary investments that we've gotten approved through our board. The largest is a new linear alpha olefins plant. It'll be about 350 kilotons. It's expected to come on stream probably in late 2016 or early 2017. The other investment we're going to make is in a PAO plant, probably 20 kilotons in Texas. Not a large plant, but it goes into a very specialized market and has a very high margin. So total investment in those two plants together is something in the range of $350 million, and we would expect that they'll add roughly 120 to 150 million of EBITDA to the INEOS group.
The other thing that's going on in the U.S. is that while the initial investments around manufacturing or in the base chemicals like olefins and polymers, the businesses that we participate, we actually think there's a manufacturing renaissance beyond that. So it's a very bright future, I think, over the long haul that is going to accompany this incredible gift we've been given around shale gas as a low-cost feedstock. There are things that actually could derail it, and so we've tried to factor those into our thinking. You know, it's kind of a plan for the worst and hope for the best, but I think the kinds of things that could change the game a little bit are if exports of LNG out of the U.S. Develop, if we see continued regulations of coal and nuclear plants that actually put a burden on energy and shift the gas into high demand mode, that actually could put some pressures on these things.
The biggest issue short term is potential overcapacity in the United States market, which could drive down domestic prices. The second thing is probably with a significant amount of growth that's coming on very quickly, it's going to create some very significant wage inflation. So you're going to have some inflation pressures, which will drive up the cost of those projects, and ultimately some of them will probably get canceled.
Petrochemicals and what we do is at the crossroads of industry in my mind, and it's actually a great place to be. And all the signs point to a path that actually is pretty bright. These base chemicals are the building blocks of an industry. Low-cost energy also feeds the manufacturing industry, and I think you'll just see this move down the chain. And so it looks like a bright future for us in terms of growth and opportunity around the feedstocks.
The cost advantage to produce ethylene in the U.S. versus Europe, as an example, is about $600 a ton. So in the LAO business in particular, probably 90% of the cost is related to variable costs and specifically raw material. So we can use that cost advantage to have a very profitable LAO unit.
So with cheap feedstocks, low-cost energy and a seemingly endless queue of potential investors, the US chemical industry is clearly in rude health. And the way Dennis and Bob see it, the good times have hardly begun.
I think the low-cost structure of the U.S. will actually make it a real force in the world, again, in terms of manufacturing.
I would feel very comfortable investing in the United States, and in terms of profits for INEOS, I think most people recognize there has been a fairly significant shift of profitability from other areas to the U.S.
The U.S. is as competitive as any place in the world right now. We're able to match the Middle East, and we see a pretty bright future, actually.
Certainly it's good for INEOS to make money across the board, and we'd like to see that happen, but right now the U.S. is the place to be.